Welcome to the latest Motley Fool scoreboard. I'm on in Chalk Balloon. We've got longtime fools, Lou Whiteman and Rick Menares, giving a 1 to 10 rating to one of those companies that many investors seem to love. That includes Lou Whiteman. The Moneyball database agrees. It's AerCap Holdings, ticker symbol AER. First, we'll rate the strength of AerCap's business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Rick's at a 6.5. Here's how much Lou loves it, 9.5.
This might be my favorite stock. Okay, what this is, fools, for those who don't know, it's an aircraft leasing business. They buy planes and then lease them back to airlines. AerCap has twice bought its largest competitor and now is the undisputed leader in its field. They are so big that if Boeing or Airbus, if they want to launch a new jet, they are going to call Gus Kelly at AerCap before they do so and ask permission. That is how powerful this company is in the business. I love the economics of this business. They have global diversification. They are constantly refreshing their fleet, so they have the newest models. That is a huge thing because airlines do get in trouble, and this is a cyclical industry. But if the planes are returned, it's the newest, most fuel efficient that are easiest to replace. We saw that in COVID. We've seen that throughout. I can't go invincible with any stock, but 9.5 on it, this is about as close as I am to invincible.
If Lou can have halves, then I won't be a have-not. I went with 6.5. I respect Lou's bullishness, but I don't share the altitude. AerCap may be the world's largest owner of commercial aircraft and leader in aviation leasing, but it's ultimately at the mercy of a very turbulent industry. Annual revenue has been negative in 4 of the last 9 years, and even in the other 5 years, it has only topped 8% growth once.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Rick, you're at an 8. Lou, you're at a 9.
So Angus Kelly, has been at AerCap since before AerCap was AerCap. He was hired by Guinness Pete, the predecessor company, in 1998, and he's worked his way all the way up through the ranks. He is this industry. He knows this industry. CEO since 2011. He's used wheeling and dealing to build a monster business, and he's only in his 50s. So in theory, he could be around a lot longer. I do worry about succession planning because he is just so good. It's hard to imagine the next person in is going to be as good. So, I guess that's a something, but this is a deep bench, deep ties. Kelly has been such a driving force in creating this industry. I've struggled to find bad things to say.
Yeah, I'm at an 8. So I'm the away team here, playing on Lou's tarmac turf. So if he thinks Kelly's a flying ace, I'm not going to disagree, but I'm knocking my score down a point from Lou as a piggyback discount.
Right. For financials, a 10 is a fortress, a 1 is yikes. Rick's at a 6. Lou, once again, is higher at an 8.
So the first thing people look at with AerCap is the balance sheet, and that's usually enough to make them go away because this is a debt business. $46 billion in debt versus a couple billion in cash. The thing is, for AerCap, debt is the raw material. Every bit of that debt is backed by an airplane asset that is new and can be sold. It doesn't eliminate the risk. I'm not going to say that, but it does mitigate it. AerCap, they trade at a slight multiple to book value. Every quarter, they sell a bunch of assets, and they always sell the assets at closer to 1.5 to 2 times books, implying that, there's real value here if they did need to sell. Finally, look, this is a cash generation machine. Management knows what to do with it. Since the beginning of 2022, so less than 3 years, that share count is down by 27%, and it's only now accelerating. This is a great cash generation and return to shareholders story.
Yeah, so I'm at a 6. When I see an enterprise value that is 3 times its market cap, I'm going to get a little anxious. I get Lou's case for why this $46 billion in long-term debt isn't as scary as it seems, but between the leverage and the stock's unimpressive growth, I have to obey the buckle your seatbelt sign.
Rick, let's talk valuation. How well will AerCap Holdings stock do over the next 5 years, and how safe is it? 10 is a sure thing, 1 is a lottery ticket.
Yeah, so I went with a 5 to 10% return, a safety score of 7. So the stock has beaten the market over the past year. It's more than quadrupled over the past 5 years. That usually makes it seem like, hey, this is going to be a highly valued stock, and it's not. It's trading for less than 10 times forward earnings. But if you swap out market cap for enterprise value, that multiple tops 30.
Yeah, so a lot of that growth was coming off of COVID, so we ignore that. I'm at 10 to 15% here. I mentioned before, AerCap trades basically just above book, and it has for most of the decade plus I've owned it. I think it's wrong. I think the market isn't giving it a fair shake, but I will concede the market disagrees with me, and I don't expect it to improve from there. The good news is that book value is growing over time, and it grows as the fleet renews that. So you get that growth, plus you get, now they have a dividend, and you get this share repurchasing that's just, again, it's only accelerating. So I do think it beats the market 10 to 15%. For safety, I'm at an 8. Not even the pandemic messed up this story. I think even if something terrible goes wrong, you liquidate the fleet. There's a lot for shareholders to recover, even in the worst case scenario. It's no equity is completely safe, but I believe in this one.
Thanks to both Lou and to Rick. Lou tried his hardest to make me buy it. Rick's scores were a bit lower. They averaged out to a 7.5 out of 10. But as Lou talked about, his COVID shares are more than a 10 bagger. And this is 5 years later. Look, it is on my personal 100 stock watch list. And my dream price is much higher than where Lou bought in. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Datadog. Till then, full on.